You're listening to the Multifamily Market Watch for Washington State. Apartment owners who need to know, trust HFO, the leading source for multifamily industry news around the state, from Puget Sound to the Tri-Cities.
Welcome back to HFO's Multifamily Market Watch. This week, we focus on Washington State. I'm your host, Aaron Kirk Douglas. The top news this week: a new report indicates that Washington now employs the most significant percentage of tech workers in the United States. The University of Washington is out with its first quarter apartment market report. And the State Building Code Council delays natural gas codes due to a Ninth Circuit Court ruling. We'll have those stories and more in just a moment. This HFO Multifamily Market Watch update for Washington State is co-sponsored by Gantry Inc., the nation's largest independent mortgage broker, and by J.R. Johnson, experts in multifamily restoration and repair work. We have much to get to this episode, but before we continue, I want to thank you for listening. Most people don't know, but our podcasts, which began more than 7 years ago, have achieved more than 1,000 unique monthly downloads. That's a substantial number, considering our target audience is multifamily owners and investors in Oregon and Washington. When we first started, we were delighted to reach 250 downloads a month, and now we regularly reach 4 times that number. So if you're an investor or owner of a multifamily asset in the Pacific Northwest, please share our podcast with your investor friends and colleagues. In the months ahead, we'll be formally combining the Oregon and Washington podcasts into one feed and alternating our focus between Oregon and Washington each week. So much of what happens in the region affects both markets that we want to be sure you're getting all the information and data we are reviewing in our office. Each episode title will indicate whether it is Oregon or Washington focused, so you can decide which podcast interests you most. In the interim, we'll continue to host the Washington podcasts on the HFO Multifamily Market Watch and the Washington Multifamily Market Watch until they're officially merged in a few months. In the meantime, please feel free to send feedback to service@hfore.com, mention us in your calls with our brokers, and share our updates with your friends. We have a lot to get to today, so we'll start with the important news that the Washington State Building Code Council has delayed its planned new codes surrounding the use of natural gas in apartments. The Building Code Council had passed new rules banning traditional HVAC systems and natural gas in new residential and commercial construction. That new code language would have required heat pumps for space and water heating, but the Ninth Circuit Court found in a lawsuit involving the California Restaurant Association versus the City of Berkeley that federal law preempts state and local restrictions on the use of natural gas. The rules banning natural gas had been set to take effect on July 1st of this year, but they're now being delayed to November 1st to see whether the ruling is appealed. The University of Washington Center for Real Estate Research reports that apartment rents in Washington grew by about 1.4% and 2.2% throughout the rest of the state. In addition, vacancy rates continued upward from 5.5% to 5.9% in the Puget Sound region and 4.3% elsewhere. The Seattle Times reports that despite all the news about layoffs hitting Microsoft, Google, Amazon, and Meta, Washington's leading job growth industry continues to be tech. Washington is number 1 for job postings in emerging tech like artificial intelligence and blockchain. More than 40% of those job openings are for technologies currently in development and expected to be widely used in the next 5 to 10 years, creating significant social and economic impacts. More than 20% of Washington's economy is tied to tech, more than twice the national average. Last year, Washington recorded nearly 350,000 jobs at tech or tech-centric companies, with all but 20% of those jobs in the Seattle metro area. Oregon has 6.7% of its positions in tech, ranking 10th in the country overall. Only a few years ago, some Seattle Metro residents could buy homes and have rent payments slightly more than what they were paying in rent. But as the Seattle Times reports, those days are long gone. The median home mortgage in Seattle is now 88% higher than the monthly rent for the same home. Significant contributors to this increase includes today's fixed-rate mortgage rates hovering around 6.6%, up from 3% in 2020 and 5% a year ago. The Urbanist reports a group called Tacoma for All is pushing a sweeping tenant bill of rights while the city is planning a weaker alternative. Tacoma for All is collecting signatures for a November 2023 ballot measure. The measure would prohibit unfair or excessive fees, require landlords to pay relocation assistance for rent increases above 5%, and prohibit school year evictions of students and cold weather evictions. The city's plan calls for no relocation assistance and a schedule of rent increase notices based on the amount of the rental increase. Seattle area rent trends are leveling, with median rent across Seattle nearly flat in April from a year earlier, according to the rental tracking firm Apartment List. That represents a significant change from last year when renters experienced a sticker shock of 17% increases on new leases. Overall, since the start of the pandemic in 2020, rents are up 9% or about 3% per year. With the addition of 1,700 new apartments in downtown Seattle last year and an additional 4,000 under construction, rents are expected to remain relatively flat, even with Seattle's recent ranking as the fastest growing city in the U.S. An additional 2,100 apartments are under construction in Shoreline, representing a 42% increase in overall apartment stock for that city. It remains likely that tenants can expect a return of rental increases as new supply cannot keep up with demand in coming years due to a slowdown in recent permit applications. Speaking of new apartments in Seattle, Washington Holdings has announced plans for a solar-powered building of around 225 rental units at 3000 Western Avenue, with construction set for 2 or more years from now. Seattle's first 2 affordable housing communities in decades are open. The 2 buildings, Blake House and The Rise on Madison, offer 367 total units, ranging from 436 square foot studios to 1,000 square foot 3-bedroom, 2 baths. Greenleaf Capital Partners of Pleasanton, California, have purchased the 96-unit Encore for $35.32 million. The building was initially intended as condos, as it was located near light rail in Seattle's trendy Columbia City area and built in 2022. It offers a mix of studios and 1 and 2 bedrooms. One Bellevue apartment project in the works for 7 years may finally get off the ground. The 312-unit development at 10850 Northeast 8th Street in downtown Bellevue will consist of 2 5-story buildings on top of an existing parking garage. Originally envisioned as a high-rise, the project was scaled back due to the high construction costs above that garage. Wallace's Bellevue North Shopping Center will be demolished for another new apartment project. That development will consist of 466 apartments and will break ground the second quarter of 2025. That community will have one 28-story tower with 308 workforce housing units and a 7-story building with an additional 158 units. In addition, plans call for the property to include 20,000 square feet of retail space. There are more details coming out on Bosa Development's latest 3-tower project in downtown Bellevue. The residential project on the east side of Bellevue Way Northeast at Main will be taller than the originally planned 27 stories. The first phase will contain one 27-story residential tower with ground-level retail above and below-grade parking. The second phase will include two 37-story buildings with ground-level retail and below-grade parking. The Puget Sound Business Journal reports the Bellevue Club has submitted pre-development services for two residential towers, adding 262 homes and 250 parking stalls. However, the private club has said it does not plan to add more members to its existing roster of 5,000. Meanwhile, in the South Sound, Tacoma retailers are banking on projections of higher population numbers in the years ahead. In the first half of 2023, Tacoma's downtown has already added 8 more restaurants and retailers, an increase of 5%. With more than 7,400 new apartments downtown since 2019 and thousands more in the pipeline, Tacoma is anticipating an additional 5,000 souls each year through 2040. Multifamily owners downtown and the South End are hoping for more grocery stores, since renters aren't likely to want to ride the new rail cars to carry their groceries. 300 units of affordable housing have been proposed near the Tacoma Dome. Seattle developer Great Expectations plans 148 parking spaces and 8 stories on a site currently occupied by a climbing gym. It plans to name the apartments the Arbutus and begin construction after completing a 199-unit project known as Cornice House nearby. The projects are within walking distance of the Sounder commuter trains, the Tacoma Link light rail, buses, and on-demand shuttle service for Joint Base Lewis McChord, Ruston, Spanaway, and the Tide Flats. Hotel-to-housing conversions are relatively new, and the latest new property, the 96-unit Pinnacle Apartments in Fife, is opening this week. Sage Investment Group says most units are 330 to 400 square feet and will rent for $1,275, including utilities. The property was previously known as the Port of Tacoma Inn. Sage Investment Group also purchased a Travelodge across the street, which it plans to convert as well. Equus Capital Partners has purchased the Sierra Sun Townhomes in Puyallup for $45 million. The 150-unit property was built in 2003 and consists of 22-story buildings on 17 acres. Stay up to date with the latest from the Washington State multifamily industry by following our blog, available if you type in Northwest Apartment Investor Blog. You can also find it from our website at hfore.com. And don't forget to subscribe to our HFO Multifamily Market Watch podcast, which is available in all major podcast markets. Thanks for listening.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is an affiliate of the Global Real Estate Advisor Network.